Welcome back. It's been another month and a bumpy one to say the least. Halfway through the month, Tesla stock was down around 17.5%. Quite a bit. But by the back end of the month, the stock had rallied and ended the month only 1.15% down. So a bit of a turnaround in the last 10-12 days of the trading month. What does this mean for the value of my portfolio? Well, across both my ISA account and my general investing account, they now stand at a combined value of £154,358. Once again, I've not invested any more of my own money myself, but I will start to over the next couple of months to put money back into my general account and invest. I have been looking at adding probably 2 new positions now, 2 different companies in different industries, completely different, people probably won't expect. But I'm going to do a bit of a deep dive on why I think I'm going to invest in those in 2 separate videos over the next coming weeks. And just give you my reasons why I like them, why I think they've got a big moat, why they're going to grow, and why I think they'll be a good addition to my portfolio. I've not bought or sold any shares. I still own just Tesla and that little bit of Google, but watch out, that might change. Could be going from 2 to 3 or even 4. In terms of the broader macro market, well, throughout the course of August, it was relatively uneventful actually, with all the key macro measures such as the CPI, the PCE, both of them coming in as expected or in line with expectations that the market thought. This is good as it probably brings some stability to the market in what is notoriously a bad month for the stock market historically. In the middle of September is where a lot of action will happen for the macro market, where we get the CPI, the PPI, and also then ultimately the Fed's rate decision. They happen on the 13th for the CPI, 14th for the PPI, and then the 20th of September for the Fed's rate decision. What do I expect from the Fed rate decision? I personally don't think they will raise rates, and I don't think that they'll raise them any further. I think we are at the top in America, in the US. Some are projecting a one and done scenario, but I personally think we are just done. I think rates are where they are, inflation is coming down nicely. I think that the Fed will hold the rates at 5.25% that they are now into the beginning of next year, and then come February time they'll start dropping down the rates throughout the course of 2024. This is because we've seen, and as you can see from this tweet here, that applications for mortgages in the US, they're at the lowest level since April 1995. That's what? 28 years? If I can get my maths right, yeah, 28 years. People just are not moving. People can't afford to go from an interest rate of 2-3% all the way up to a 5 to 7% mortgage. It basically doubles your cost of a mortgage each month, your mortgage repayment. Generally, people spend somewhere in the region of 25 to 50% of their take-home pay in mortgage repayments. Well, that becomes 50 to 100% of the take-home pay, which is just not healthy. What have we seen from Tesla this month? Strong China numbers, which I was surprised at, considering the economic data that we're seeing coming out of there. This past week, the new and improved Model 3, new smoother shape, I'll put a picture up, new upgrades like the screen in the back for people, I think. And also we've just recently seen price cuts on both the Model S and X. And the cut on the X means that now in the US, it's eligible for the tax credit of $7,500. Hopefully going to be a catalyst to sell more of those. We'll see. This has been a short and sweet update for the month, I know. But if you do want to keep up to date, please do subscribe to the channel. Until next time though, stay safe.